Just as Sage 50 has two account types to track long-term and short-term assets, it also has two account types to track short-term and long-term liabilities. The other current liabilities account type tracks liabilities, which are amounts that you owe that your company also expects to pay within a year. Examples of other current liabilities might include short-term loans or lines of credit. Additional examples would be your accounts payable, other credit card accounts, accrued sales taxes, and accrued payroll taxes. The long-term liabilities account tracks debt that your business is not likely to pay off within a year. The most common long-term liabilities are loans that you will pay off in a period greater than a year. If you buy a fixed asset with a loan, you'll need to create a long-term liability account to track the value of the loan as you pay it off. The amount of the loan will probably also set the original cost of the fixed asset account created to track the value of that asset that you purchased with the loaned money. You create both types of accounts within the Maintain Chart of Accounts window. As you set up the liabilities, you will need to give each liability account an account number and a description. Then you select the type of account for each by selecting either Other Current Liability or Long-Term Liability from the Account Type dropdown. To create balances for the liability accounts after you've created them, you simply need to create a general journal entry. For example, if you were going to purchase a $30,000 car with a loan borrowed from a bank, you would create both a fixed asset account for the car and a long-term liability account for the loan. Then create a general journal entry in which you would place the amount of the loan as a credit to the long-term liability account, and then record the same amount as a debit to the car's fixed asset account.